The Fed is projecting higher inflation and lower growth amid a backdrop of uncertainty. Yahoo Finance's Jennifer Schomburger joins us now for a closer look at Fed commentary over the last week and the shifting policies coming out of the White House.
Good morning, Miles. It's nice to see you in the anchor chair. Uncertainty remains the refrain for Fed officials. Just this morning, New York Fed President John Williams saying in a speech that he is very uncertain about the outlook for the U.S. economy. That speech title was Certain Uncertainty. He says he expects lower growth this year amid a lot of unknowns about the impact of new trade policies, immigration, and fiscal policies. Fed Chair Jay Powell, for his part, said this week that his base case for any higher inflation from tariffs is that it will be transitory. That comment raising a lot of eyebrows this week, reviving memories of the Fed's slow response to inflation coming out of the pandemic, where we saw inflation rise to a 40-year high. All of this raising questions about whether the Fed could make the same mistake again. Mohammed Al-Arian, who's president of Queens College in Cambridge, saying on social media this week, quote, "I would have thought that particularly after the big policy mistake of earlier this decade, and given all the current uncertainties, some Fed officials would show greater humility. It's simply too early to say with any regressive confidence that the inflationary effects will be transitory." Former Treasury Secretary Larry Summers reportedly says he's astonished, though for his part, Fed Chair Powell did qualify his expectation with uncertainty. Take a listen.
I think that's kind of the base case, but as I said, we really can't know that. We're going to have to see how things actually work out in real time. As we know, it's hard to make that judgment. And we're well aware, of what happened, obviously, with the pandemic inflation.
Treasury Secretary Scott Bessent said earlier this month that he would hope that failed Team Transitory could get back together and think that nothing is more transitory than tariffs. Meanwhile, Wilmington Trust Chief Economist Luke Tilley is one who actually agrees with the Fed chair, saying that he thinks tariffs amount to a significant tax hike and are more likely to weaken consumer spending, ultimately weighing on longer-term inflation. Separately, Miles, this morning we got a statement from Fed Governor Waller on his dissent at this week's policy meeting. He would have preferred to have kept the balance sheet runoff at its current pace rather than dropping that back to $5 billion a month from $25 billion. He doesn't see any distortions right now in money markets and thinks that reserves remain abundant. Back to you.
And, Jen, I think given all the headline talk about the inflation and growth outlook, we sort of forgot about the QT changes that
we
saw.
And we did see Treasury yields go down on that, which is something this administration wants.
Yeah, so certainly that'll be the follow-up. We'll worry about QT next week once we get through this one. All right, Jen Schomburger, thanks so much.